Something happened just a few days ago that could completely change how many XRP holders view what Ripple is building behind the scenes. And here's the interesting part. This isn't a rumor, it's not a prediction, it's not a social media theory. It's an actual letter submitted directly to regulators. And after going through the details, it may reveal something much bigger than most people realize. Because if this interpretation is correct, we're not just talking about stablecoins anymore. We're talking about a potential path toward insured digital dollars, institutional adoption at a completely different level, and a strategy that appears far larger than what most people are currently discussing. Stay with me because later in this video, we'll connect this document to several key figures around Ripple and explain why some people believe this has been part of a much larger plan for years. Welcome back to XRP Update. Today we're looking at a document that recently caught a lot of attention because it may provide a clearer picture of what Ripple is trying to accomplish with RLUSD and the broader digital asset ecosystem. For months, one of the biggest conversations in crypto has been the Genius Act. Supporters view it as a major step toward regulatory clarity for stablecoins. Critics argue it still leaves important questions unanswered. But one topic keeps coming up over and over again: deposit insurance. Many discussions around the Genius Act have focused on the idea that stablecoins are different from traditional bank deposits. And because of that distinction, stablecoins themselves would not automatically receive FDIC insurance protections. Now, at first glance, that sounds straightforward. But according to a recently submitted letter, there may be another angle to consider. And this is where things start getting interesting. Ripple submitted a formal response regarding how stablecoin reserve deposits should be treated. Not the stablecoins themselves, the reserves backing them. That's an important distinction. According to Ripple's position, the reserves held inside regulated banking institutions should potentially receive the same treatment as traditional deposits under existing frameworks. In simple terms, the argument is that if reserves are being held within properly supervised banking environments, they should not automatically be excluded simply because they are connected to a stablecoin structure. Now, why does that matter? Because confidence drives adoption, and institutions care deeply about confidence, transparency, and protection mechanisms. The bigger the financial system becomes, the more important those protections become. This is why many observers believe Ripple isn't just thinking about today's market. They're thinking about the infrastructure required for large-scale adoption years into the future. And that's where the discussion starts expanding beyond stablecoins alone. Because if you step back and look at Ripple's history, you'll notice something that's difficult to ignore. The people surrounding Ripple have often come from places you wouldn't normally expect. Former regulators, former central banking officials, treasury experts, financial stability specialists, institutional leaders. And that's something that has caught investors' attention for years. Now here's the part many people may overlook. One of the names frequently discussed in connection with financial stability conversations is Sheila Bair. Many people know her as the former chair of the FDIC. Today, she's part of RLUSD's advisory structure. Think about that for a moment. You have a stablecoin initiative connected to people who have spent significant portions of their careers dealing with banking systems, financial stability, risk management, and regulatory oversight. Whether you agree with every conclusion people draw from that or not, it certainly raises interesting questions about the long-term vision. Because startups don't usually attract this kind of experience by accident. And this isn't the only example. Over the years, Ripple has brought together advisors, executives, and board members with backgrounds that stretch across government agencies, major financial institutions, and global regulatory bodies. Now, does that guarantee success? Of course not. Nothing is guaranteed. But it does suggest that Ripple has consistently positioned itself at the intersection of technology and traditional finance. And that's exactly why many long-term XRP supporters continue paying attention. Not because of what happens in a single day, not because of a short-term price move, but because of the infrastructure being built underneath the surface. And that brings us to another important point. Because while all of this is happening, regulatory clarity remains one of the biggest themes in the entire industry. Many lawmakers continue emphasizing the need for clear distinctions between digital assets, banking services, securities, commodities, and payment systems. Without those rules, institutions hesitate. With those rules, adoption can accelerate. That's why so many market participants are closely monitoring legislation and regulatory developments right now. Because they're not just looking for clarity, they're looking for certainty. And certainty is often what large institutions need before committing significant resources. But here's what many people may be missing. The conversation isn't only about regulation anymore. It's increasingly becoming a conversation about financial infrastructure. Who will provide it? How will it work? And which networks will benefit as adoption grows? And when we continue, we'll connect this directly to XRP, financial stability discussions, Ripple's long-term strategy, and why some people believe the company may be preparing for a much bigger role in the future financial system. Now, if you've followed XRP for any length of time, you've probably noticed a pattern. Every time the conversation starts moving toward institutional adoption, financial infrastructure, or regulatory integration, the focus eventually comes back to one question. Why has Ripple spent years building relationships with people connected to banking, regulation, and financial stability? That's what makes this recent letter so interesting, because when you look at it alongside Ripple's history, it starts to fit into a much larger picture. For years, Ripple executives have talked about solving real-world financial problems: faster settlement, cross-border payments, liquidity management, tokenized assets, and ultimately creating infrastructure that financial institutions can actually use. The key word there is infrastructure. Most people focus on prices. Institutions focus on infrastructure. And those are two very different conversations. The average investor sees a chart. A bank sees settlement systems, liquidity networks, compliance requirements, and risk management frameworks. That's why developments like this matter. Because if stablecoins, tokenized assets, and blockchain-based financial products continue expanding, institutions will need systems they can trust. They'll need regulatory clarity. They'll need reliable liquidity. And they'll need networks capable of handling large-scale financial activity. That's where many XRP supporters believe the XRP ledger enters the discussion. Not because of hype, but because of utility. And utility is something that keeps showing up in conversations around XRP. One example is liquidity. The XRP ledger was designed around the idea that multiple assets could exist on the same network. Not just XRP, not just one stablecoin. Multiple currencies, multiple assets, multiple forms of value. And that's important because many people still misunderstand how XRP was intended to function. The goal was never for every asset to become XRP. The goal was for XRP to help connect assets, to act as a bridge when liquidity is needed. As more assets arrive on the network, more potential pathways are created. And that's why some observers believe growth on the XRP ledger can strengthen the overall ecosystem. The more assets that exist, the more activity that occurs, the more opportunities exist for liquidity solutions. Now, whether adoption happens quickly or gradually remains to be seen, but one thing is becoming increasingly difficult to ignore. The conversation around blockchain has evolved. A few years ago, most discussions centered around speculation. Today, the focus is increasingly shifting toward tokenization, stablecoins, settlement infrastructure, and institutional participation. And that shift may be one of the biggest stories unfolding right now. At the same time, regulatory developments continue moving forward. Many lawmakers have repeatedly emphasized that America wants to remain competitive in digital assets. That's one reason legislation like the Clarity Act continues receiving so much attention. Because markets don't just react to technology, they react to certainty. And when certainty improves, participation often increases. That's why investors are watching these developments so closely. Not because every headline immediately changes the market, but because each step helps shape the environment where future adoption can happen. And that's really the bigger theme here. This isn't just about one letter. It's not just about one stablecoin. And it's not just about one company. It's about understanding how the pieces may fit together. You have regulatory discussions happening, you have stablecoin frameworks developing, you have institutions exploring blockchain technology, you have tokenization expanding into new areas, and you have infrastructure providers positioning themselves for what comes next. Whether all of this unfolds exactly as supporters expect remains uncertain. Nobody knows the future. But what we do know is that blockchain technology continues moving deeper into conversations that were once reserved for traditional finance. And that's why many long-term XRP holders remain focused on the bigger picture. Not the daily noise, not the hourly chart, but the long-term direction. Because while short-term prices can move up and down, infrastructure takes years to build. And some investors believe we're finally starting to see the results of groundwork that has been laid for a very long time. So the real question isn't whether one document changes everything overnight. The real question is whether this document gives us another glimpse into where Ripple believes the financial system is heading. And if that's the case, then this may be one of the more important developments XRP investors will want to keep an eye on moving forward. We'll continue following these updates closely here on XRP Update and bring you the latest developments as they happen. If you found this discussion valuable, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss future XRP coverage. Thanks for watching, and I'll see you in the next update.